Snipers, you have to see what's happening. The Bitcoin price right now as we are officially starting the weekend. And this morning, the jobs report came out with a lower than expected unemployment rate, which means that the Feds can continue raising interest rates without hesitation. And that caused Bitcoin to fall back below the 2018 previous all-time high at $19,800 and over $12 million of Bitcoin long liquidations in 1 hour, the highest hourly liquidation level since September 27th, where we had the previous Fed's meeting. And look at this inverted chart. If you think the absolute bottom is in, would you long this? And it's pretty much saying that Bitcoin right now is inside of a descending triangle formation. If you were to invert that, it would look like an ascending triangle. And so if Bitcoin is in a descending triangle and the DXY has continued to form new yearly highs with Bitcoin yet to form new yearly lows, does that mean it's almost guaranteed that Bitcoin is ready to form new yearly lows? Well, let's talk about that, snipers, and dive straight into the chart. Smash the like button for the YouTube algorithm for this 3 a.m. update, making sure to get you guys the best content every single day, no matter what time it is. So if we look at what's happening in Bitcoin after the job numbers came out, notice how we are now fully below the major level here at 19,800, opening up the door back towards 17,204. And so if we're going to expect any sort of major volatility to the downside this weekend, I believe 17,204 is an area of interest where we could potentially find some support. Now, let's just take the schematics of this descending triangle. We'll just take the base of the triangle to the top of the triangle to look at a potential downside target. And let's say that we do see even further downside below 17,204. Does that mean that we potentially have the $12,500 level on the table, maybe even 10,000 US dollars? I think that it would be a little bit of an extreme scenario to say that right now. But if we continue to see weakness in the equity markets, then we certainly could potentially get to that point. And the reason I mention that is the S&P 500 is also showing a lot of weakness, about to test its yearly lows again. And so if we do see the S&P 500 slip into next week, then that could open up a further downside scenario for Bitcoin. So it's extremely important right now that the S&P 500 holds this low if we want to assume a potential double bottom here. But as I talked about in our video over the last 2 days, all we were doing is coming up to face more resistance, and we haven't yet seen a confirmation of a breakout for the equity markets or Bitcoin, both facing extremely strong resistance. And we knew this because the Bitcoin against SPY chart never gave us a confirmation of upside. And you can see we are still finding major resistance here. What's interesting, though, is the Bitcoin against SPY chart isn't seeing complete failure here. We're not just dumping down. And so let's continue to monitor this. This could still potentially break out here. Notice how the Bitcoin to SPY chart is very different than the Bitcoin against US dollar pairing right now. And that's why we monitor the 4-dimensional revolving parts here on the Snipers channel. And so let's continue to monitor the Bitcoin against SPY chart. And then lastly, heading into this weekend, we have to expect manipulation in the markets because Bitcoin CME futures are closed. And with that being said, what we have to continue to monitor right now is, of course, Bitcoin to the US dollar pairing. But I also want you guys to monitor Ethereum to Bitcoin, because you can see we haven't yet broke back above the previous weekly open, meaning that 65,000 Satoshis is still on the table. And if we breach this level, that would be an extremely bearish confirmation. And what we're also monitoring, which is directly affected by the Ethereum to Bitcoin chart, is going to be Bitcoin dominance, which has recently been seeing some upside. And so let's continue to monitor the price action, snipers. Not much happening there to the DXY. It is the weekend, so no reason to go into traditional markets. But not a surprise, Bitcoin finding resistance right now. The job numbers came out today. Lower than expected unemployment. You would say that's a good thing for the economy, but it gives the Feds the green light to continue raising interest rates. And if we do continue to see interest rates increase, then of course that's going to have a direct effect to the markets, as we've seen since the start of this year. Now, the United Nations and the International Monetary Fund are still pressuring central banks across the board to stop raising interest rates, with the fears of Credit Suisse, or whatever you want to call them, potentially defaulting and becoming another Lehman Brothers, and also the other banks also potentially in a position to default, the UN and the IMF are extremely worried that if we continue to see interest rates increase, it's really going to start to affect the global macroeconomic environment. Not to say that it hasn't already. If we look at what happened to the Great British Pound, if we look at what happened to the Euro, of course, we're starting to see the effects of a strong US dollar. Let's see what happens to Bitcoin. The best hedge against inflation, still a great hedge against inflation, still double the price that it was prior to the pandemic. It has been the best inflation hedge. Of course, after the pandemic, if you were to get in after the catalyst of inflation, you might not be seeing and reaping those benefits. But for the most part, if you're in before inflation and before the money printing, then yes, it has been a great inflation hedge. Will it continue to become a great inflation hedge? I definitely believe so. I think that if at any point we do create new yearly lows, that's going to be that final move to the downside. There's a lot of indicators on chain showing that we are either at a bottom or close to a bottom, right? Over 74% down from the all-time high. You only can get so far down. I think the average is 85% in a real bear market for Bitcoin. And so if we see 9,000, let's say, and that CME gap filled, then it is what it is. We just continue to move forward. And at that point, we can continue to see some upside later down the road. So let's see what happens, snipers. Not to be bearish. The markets do the exact opposite of what you expect. And so I'm still bullish. If we can get above 19,800, it opens up the door to upside this weekend. So let's see what happens. But heading to this weekend, I would say it's a neutral weekend, neutral to bearish, not extremely bearish, definitely not bullish, but anything could happen. So let's see, snipers. I'll keep you guys updated as always. Smash the like button for the YouTube algorithm. And until next time, snipers.